Let me leave you with a medium to long-term prediction to steady your nerves. Is this crash bad? Absolutely not. The market was a pressure cooker of speculation. This leverage washout is a necessary reset. Note that giants like BlackRock and Fidelity aren't selling, they are accumulating during this dip. The macro backdrop of global liquidity expansion hasn't changed. My verdict: in the next 6 months, we will see Bitcoin not only recover these losses, but hit new all-time highs. Against the brutal backdrop of the past 24 hours, where we witnessed over $500 million in total liquidations across the network, something fascinating happened on the Bitcoin blockchain. In the blink of an eye, a mysterious massive transfer occurred. 2,000 Bitcoin valued at nearly $200 million bias were moved swiftly into a cold wallet. While retail investors were capitulating and fleeing the market, a true whale was quietly locking their chips into the vault. This single move shattered the narrative of total panic. It tells us one thing: we need to calm down and stop letting emotions drive the car. Let's look under the hood at what the technicals are actually telling us. The technical landscape. For a professional trader, predicting price isn't about guessing. It's about identifying key levels. While this crash looks scary, there are two specific lines on the technical chart that will decide Bitcoin's immediate fate. First, this drop is currently testing the 50-day moving average. This is a critical psychological line of defense. My projection is this: if Bitcoin can hold this level by the weekly close, let's assume around the $90,000 mark, then this is simply a healthy retracement within a broader uptrend. The bulls will likely regroup and launch a counterattack from here. However, if the price effectively breaks below this line, the market loses its support. Where is the next bottom? According to Fibonacci retracement levels, we could see the price dive straight toward $82,000 or even lower. That is where true conviction will be tested. Now, look at the RSI, Relative Strength Index. It's flashing a signal: oversold. The RSI has rapidly dropped near the 30 mark. In technical analysis, this means the market is stretched to the downside. Think of it like a compressed spring. When the market is this oversold, a rebound is often imminent. But here is my warning: beware of the dead cat bounce. Do not rush in at the first sight of a green candle. We need to see a confirmed signal that the bottom has stabilized. Crypto equities, MicroStrategy versus Coinbase. For those of you who don't own crypto directly but hold related stocks like MicroStrategy, MSTR, or Coinbase, listen closely. Both are falling with Bitcoin, but their logic is completely different. You must view MicroStrategy as leveraged Bitcoin. Previously, its stock price soared because it traded at a massive premium relative to its Bitcoin holdings. Investors were paying extra to use the stock as a proxy for Bitcoin. As Bitcoin drops, that premium bubble is bursting. If Bitcoin falls 10%, MSTR often drops 20% or more. Trying to buy now is like catching a falling knife. The time to enter is only when Bitcoin stabilizes and MSTR's premium returns to a rational level. Coinbase, on the other hand, is an exchange. They make money on transaction fees. Crashes are often accompanied by massive volume. Panic selling means Coinbase's revenue actually spikes in the short term. The market is currently dumping coin indiscriminately, which might be a classic case of mispricing. Once emotions settle, investors will realize Coinbase's financials aren't actually bad. Its recovery could be faster than companies that simply hold coins. The macro view. Why the crash? With Bitcoin taking a dive this week, the question on everyone's mind is this a correction or is the bull market over? Let me be clear, this is not the end. It is a late but necessary washout. However, the cleaning isn't done yet. Here is why. Many retail investors are confused. Wait, isn't the new Trump administration supposed to be bullish for crypto? Why are we crashing? This is a classic financial trap known as buy the rumor, sell the news. Prices in this market are forward-looking. Months ago, smart money had already positioned themselves for a Trump victory. The so-called Trump premium was already priced in. Now that the news is out, the whales who bought early are cashing in their chips. They have no reason to hold. They are taking profits. The real killer, the leverage wipeout. But beyond sentiment, the real danger is structural. Over-leverage. In the past month, derivatives volume exploded. On-chain data shows that many traders weren't buying with cash, they were buying on margin. They bet on a straight line up and opened massive long positions with high leverage. This created a fragile, crowded long trade. When Bitcoin dipped just slightly, these high leverage positions triggered margin calls. If investors couldn't top up their collateral, exchanges forced them to sell. This forces the price down further, triggering the next guy's liquidation. This is the liquidation cascade we are witnessing right now. My analysis. This is a deleveraging event. Looking at open interest data, while some froth has been cleared, leverage remains high. We might need one more deep flush to shake out the weak hands before finding a true bottom. Add to this the regulatory uncertainty. While we expect looser policy later, the transition period is risky. Wall Street fears the current regulators, like the SEC, might launch last-minute enforcement actions to assert authority before leaving office. Markets hate uncertainty. The strategy. How to play the hand. So we know where it might fall and why it's falling. Now, what do? There's an old Wall Street adage. Bull markets make you feel like a genius. Bear markets show you who actually makes money. Stop trying to time the exact bottom. Winners rely on strategy and discipline. Here is your playbook. Do not go all in. Many novices bankrupt themselves trying to catch the bottom. Instead, use a modified dollar cost averaging DCA approach. The wait 48 hours? Don't buy today. Wait 48 hours to see if the support levels I mentioned hold. We want to see consolidation, price moving sideways with shrinking volume. That is stability. The 3-3-4 allocation method. First, tranche 30%. Deploy this when stability is confirmed. This prevents you from missing out if the market does a sharp V-shape recovery. Second, tranche A, 30%. Set limit orders, stink bids, at extreme panic levels below current prices. If the market wicks down to test lower support, these orders will fill automatically, significantly lowering your average cost. The reserve, 40%. Cash is king. Keep this untouched. It's your insurance against a regulatory black swan event. If the market rallies, use this for trend following later. Capital preservation is more important than profit right now. If you are trading contracts, cut your leverage. Volatility will remain high. If you can't stomach a 50% swing, don't use more than 2x leverage. Remember, as long as you have chips, you can play the next hand. If you get liquidated, the game is over. For long-term holders, if you hold spot, Bitcoin, or Ethereum, the best strategy is do nothing. History shows that 30% drawdowns are the standard admission fee for a crypto bull market. Conclusion and outlook. Let me leave you with a medium to long-term prediction to steady your nerves. Is this crash bad? Absolutely not. The market was a pressure cooker of speculation. This leverage washout is a necessary reset. Note that giants like BlackRock and Fidelity aren't selling, they are accumulating during this dip. The macro backdrop of global liquidity expansion hasn't changed. My verdict. In the next 6 months, we will see Bitcoin not only recover these losses, but hit new all-time highs. Every deep dip right now is a gift for those holding cash. In this market, wealth transfer is simple. Money moves from the impatient to the patient. The crash isn't scary, losing your head is. Follow the strategy, turn off your monitor, and get some sleep. Months from now, you will thank yourself for staying cool today. Until next time.